Hey. Welcome back to my channel. It's your girl, Sidity Cream. And as you can see on the screen, today we're going to be speaking about open-end versus closed-end credit. So before you're able to actually get any type of remedy and start to monetize your violations, there is a lot of studying that has to happen on the back end, right? You do need to have an understanding of consumer law, be able to understand it, retain it, and repeat it when necessary. So these videos here on my channel will help you to divulge and break down some of these laws that will be pertinent to you during your process to get remedy. Now, before we go ahead and dive into this video, be sure to go ahead and hit the like button if you found any gems or anything useful in the video. Make sure that you're subscribing, that way you don't miss the next video, and leave a comment in the comment section to let me know that you're rocking with your girl. Okay, so let's go ahead and get into it. When it comes to open-end credit, right, you will find the definition of credit under the Truth in Lending Act, right? So the Truth in Lending Act that defines open-end credit is going to be under 12 CFR 226.2. That's going to be under the Truth in Lending Act, right? Now, it's important to know that credit comes in two forms. Each form is going to have its own unique pros, cons, fees, and terms. So, the first form of credit is open end credit. Now, open end credit is revolving credit, right? So, these are your accounts such as credit cards, charge cards, personal lines of credit, and even HELOC accounts or home equity lines of credit accounts, right? Now, I do want to point out before we move on that credit cards and charge cards are two different types of revolving credit accounts. They don't have the same terms. So even though they have similarities, with credit cards, you're able to revolve the debt and pay it off at the end. With charge cards, whatever you charge on that card has to be paid fully at the end of the month. So there is a difference between credit cards and charge cards that I quickly and briefly wanted to point out. And then also with home equity lines of credit accounts, for me, I personally learned that these were revolving credit accounts as I was working in banking, right? So I worked in banking for about 4 years, and this is where I found out about HELOC accounts, because this wasn't a type of account that the bank wanted us to offer to our customers. And of course, we had to provide customer service on these accounts. So we had to learn about the product itself. So this is where I learned about HELOC accounts and that they were actually revolving credit accounts. Now, that's information for another video, but let's go ahead and let's continue, shall we? Now, when it comes to open-end credit, how it works is that you're able to revolve the debt, or essentially you're able to carry a balance from month to month. Open-end credit is an account that you can continually draw from as needed, and then you're only going to pay the interest on the amount you borrow. So, say for instance, if you had a revolving credit account for $3,500, right? And then you only use $500 of that $3,500. For that month, you'll be paying back the $500, um, or the minimum payment. But say for instance, you were paying back the $500, but then you're only going to be paying interest on the $500 and not the full line of credit of the $3,500. So let's go ahead and take a look at the definition of open-end credit under the Truth in Lending Act. So pursuant to 12 CFR 226.220, it does state that an open-end credit means a consumer credit that's extended by a creditor under a plan in which the creditor reasonably contemplates repeated transactions. The creditor may impose a finance charge from time to time on an outstanding outpaid balance, and means it has to happen as well, and the amount of credit that may be extended to the consumer during the term of the plan up to the limit set by the creditor is generally made available to the extent that any outstanding balance is repaid. So this is the definition of what an open-end credit or what open-end credit is pursuant to 12 CFR 226.2, right? Now, when it comes to closed-end credit, right? Closed-end credit, these are going to be your accounts such as installment loans, personal loans, car loans, mortgages, and student loans, right? So with closed-end credit, you will have prearranged payments or a prearranged payment schedule that's going to require you to make monthly payments over the life of the loan. So, with the repayment of the closed-end credit, it will include interest and finance charges. But unlike revolving credit, with closed-end credit, you're going to be paying those interest or finance charges on the total amount of the line of credit or the loan, however much it's going to be. So versus with the revolving credit, you only pay $500 on what you use of the $3,500. With closed end credit, if it's $3,500, you're going to be paying interest on that principal balance of the $3,500. So um, that's the difference between closed end and then open end credit. Now, let's take a look at the definition of what closed end credit means pursuant to law. So, under 12 CFR 226.2, closed end credit means consumer credit other than open end credit as defined in this section. So they only define closed end credit to mean anything other than an open end credit. So if it's not revolving, then it's defined as being a closed end credit. So anything other than credit cards, charge cards, HELOC accounts, home equity line of credit, anything other than in an open end credit, when it comes to loaning credit, anything other than what's defined under open end credit is going to be closed end credit. That's pretty much what they're letting you know here. So consumer credit, when it comes to the highlighted section here, when it says closed end credit means consumer credit. Consumer credit just means credit that's offered or extended to a consumer primarily for personal, family, or household purposes. So that was also derived from 12 CFR 226.2. So consumer credit, when we're talking about consumer credit, and you guys are getting into consumer law, you will know why you want to make sure or know what consumer credit is because it's credit that's offered or extended to consumers primarily for personal, family, or household purposes, not for business use, pretty much is what that means. Now, when it comes to you executing your billing error disputes, you are going to need to know the difference between open end and closed end credit, right? And then you're going to be wanting to know how can you execute the billing error dispute process to discharge your debts or get your accounts in that do not pay, do not collect status. Now, if you're wanting to do that and you're interested in doing that, then you want to go ahead and grab my billing error Bible. In it, it will further break down the entire billing error dispute process for you. The only difference between the billing error Bible and our Run That Remedy course is with Run That Remedy, it's hands-on. You're able to ask questions. You're able to get clarification. You have direct access to me. We're in that course for about 3 weeks, 3 to 4 weeks. We're in that course and we're divulging into the billing error dispute process. We're breaking down all of the laws, and I'm helping you actually understand how to execute your billing error dispute process. Now, with the billing error Bible, this is a 51-page study guide. You don't have direct access to me. There's no way for you to be able to ask questions once you get that DIY guide, because with the DIY guide and all things DIY, you are doing it yourself. So there is a difference in price point between the billing error Bible and the Run That Remedy course. However, at this time, we are not currently accepting new participants into our current course that's currently open. However, you can go ahead and join the wait list for the next Run That Remedy class by texting the word remedy So 407-305-7089, and it's here on your screen. So you may join the wait list for the next Run That Remedy course class by texting the word remedy to 407-305-7089. And then you'll go ahead and receive updates when registration will open. Now, alternatively, you may go ahead and visit my website at www.siditycream.com and download your 51-page DIY study guide for the Billing Era Bible today. Now, again, the difference between the DIY guide is that it walks you through the entire process, but it is a do-it-yourself guide, so you would have to have your best interpretation when it comes to you being able to interpret the laws, versus in the course, again, we're hands-on, you have access to me, you're able to ask those questions. So that would be the difference between the two. Now, getting into it, again, you guys can text the word remedy to 407-305-7089 to go ahead and be added to the wait list for the next Run That Remedy course. Or again, visit www.siditycream.com to download the Billing Era Bible today. But be sure, if you found today's video helpful, to go ahead and click the like button, subscribe to the channel, that way you don't miss any further updates when it comes to credit and consumer law. Be sure that you make a comment in the comment section to let me know if you grabbed your DIY guide. That way I can go ahead and thank you for your support. But until the next time, until the next video, take care of yourself and each other, and I will see you in the next video. Goodbye.